Hello and welcome to Walker & Dunlop's webinar on financing and the commercial real estate market. I'm Susan Weber, your moderator for today. Before we get started, I have a few tips to enhance your webinar experience. Please, below the presentation, there'll be some tabs you can use. And now I would like to welcome Willy Walker and his guest, Dr. Peter Linneman, who will discuss the commercial real estate markets, the impact of COVID-19, and ideas for moving forward. Thank you for joining us, and now I will turn over the call to Willy.
Thanks, Susan, and good morning to all of you in Western time zones, and good afternoon to all of you on the East Coast. I'm very pleased that so many of you could join us today. I think we have over 4,000 people on the line, and so thank you for taking the time to join Peter and me. I would like to thank Peter personally for accepting my invitation to come on. As many of you know, Peter has been an incredible leader in the commercial real estate space for decades, not only as a renowned professor at the Wharton School, but since founding Linneman Associates after leaving Wharton. And I would put forth to all of you, if there's anybody out there who does not receive the Linneman letter, it is a quarterly update on the commercial real estate industry, and I would strongly encourage any of you who don't get it today to get it, because it is insightful. And you will hear from Peter later on exactly why it is so insightful. With that, I'm going to turn it over to Peter. I've run on a little bit long, and so I'm hopeful that we get to some questions, but I know Peter has a lot to share with you. And so, Peter, let me turn it over to you, and thanks again for joining us.
Thanks, Willy, and thank everyone for joining us. These are trying times, and I've done a lot of reading, a lot of thinking, a lot of listening. The one thing I'm convinced of is no one knows. Very intelligent and dedicated people have views about the immunology. Very dedicated people have views about the medical. Very dedicated people are now forming views about the business side of this, or the economic side. Everybody was caught off guard, I think, by the immunology side of this, the medical side, and they were shocked, and they asked the question, how do you stop it? And basically, people have copied the Chinese model and hope that it turns out pretty well. What was missed is China had a huge reported drop in their economic activity in a matter of months, and most of us believe the actual drop was much greater than the reported drop in China, given the murkiness of Chinese data. Economists were pretty much asleep at the wheel in terms of understanding what shutdown might mean. And I think business was so busy just dealing with business that they kind of got caught off guard by how fast it shut down. Just as a backdrop, the first week of March was probably the best week in the history of the United States economy. In almost any way you want to measure it. Manufacturing was a little weak, but almost any way you want to track it. Unemployment, employment, jobless claims, income, etc. All-time highs. We were the most prosperous country of any size in the history of mankind as recently as 2 weeks ago. We then, as you all know, shut down essentially the discretionary part of our economy. How big is that? No one knows. It all depends on how you define discretionary. I've worked bottom up and top down, and I come up with numbers like 30 to 40% of our economy is discretionary, like buying a dress at Macy's, like dining out, like flying to somewhere for a holiday. You know what I mean by discretionary in a generic way, including, by the way, elective surgery or elective medical or seeing a therapist or. That 40% of the economy is shut down overnight. Now, it wasn't overnight. It took about a week, but shut down overnight. Vegas and Orlando each have around 300,000 people working 2 weeks ago in the leisure and hospitality sector. 300,000 each, roughly. I'm rounding. Basically, it's zero today. Zero. If you compare that to a normal downturn, I'm just going to stay with that as an example. A normal downturn, you'd see business in Vegas drop. You'd see business in Orlando drop. How much drop? 10%? 15%? 10%, 15% meant most people still had paychecks. Most people still had something to do. And in fact, even if you lost your job in the downscaling, you could still have a hope to find a job in that sector because somebody retired, somebody moved to a different city, somebody got ill, somebody had a baby. Today, if you've lost your job in one of those sectors, there's nowhere to go to get a job in those sectors because everybody's shut down. It's an unusual, we've never seen this kind of economic scenario before. And I'm old. And I've never seen it before. So it's a complete shutdown. So if you shut down, let's say 40% of the economy, if you shut down 90% of 40% of the economy, you're around 35% of the economy you wiped out. That means that's an annual number, right? So then you say 35% of the economy disappears. By the way, 7 trillion, just for a number on an annual basis. If you do it for 5 weeks, if it only occurs for 5 weeks is about 10% of a year, okay? So it's not 700 trillion, but it is 700 billion happening over that 5 weeks. That's a huge number. That's a lot of economic activity, unprecedented. And it gives you a benchmark about how much has to go in if you're going to try to offset. I'll give you another way to view this. We had about 210,000 new unemployment claims the first week of March. Tomorrow, the number is going to come out on last week. It comes out 1 week late. I'm expecting a number somewhere between 2 million and 6 million. I said this 10 days ago, that I'm expecting a number come out 2 million to 10 million, 2 million to 6 million. By the way, a week from now, the numbers are going to come out on this week, and I'm expecting an additional 2 million to 6 million, probably towards the upper end. That's a huge jump overnight. How big is that? First week of March, we had about 152 million people working, and about 5 million people wanted to work but couldn't find a job or hadn't found a job. So it was 152 working, 5 million not that wanted to work. As we sit here today, my guess is we're around 130 million still working in the sense they're on a payroll, 130 million working, and probably 27 million not working. And that's a staggering number in 2 weeks. That's all we're talking about is 2 weeks. And in fact, you know that some of the people who, quote, are still working are not working. They are not working. They're on a payroll. But how long can the hairdresser keep somebody on the payroll if nobody's coming in to get their hair cut? How long can the restaurateur keep somebody on a payroll if nobody's able to come in and buy? How long can Macy's keep somebody on the payroll if no one can even get there? Forget whether they buy if they got there. So it's a very dramatic situation. We have 152 million people employed 2 weeks ago. That could easily drop by 30 to 50 million over the 5 subsequent weeks. So just pause and think about that number. So if you ask, is it a very serious medical? Does it put a threat on the medical system? All those are obviously questions that I'm not the right person to ask. But I do know, my mother passed away a few months ago, unrelated to this, at the age of 95. She had been bedridden for 7 years and had been seriously demented for about 4 years. And I suspect if I said to society, would you spend $7 trillion and 50 million unemployed to get my mother to live an extra day? Everybody would say, don't be ridiculous. Of course not. I mean, you love her, but of course not. Makes no sense for society. And then it's like the old joke. we now know what you are. We're just haggling over the price. And the question is, how much price is society willing to pay in terms of unemployment, lost income, etc.? I don't know that answer. I know that that is the question. I know it has to be on the table. I know that we could solve all traffic accident deaths, about 1,000 a week, just under 1,000 a week, very easily. Just never let people ever use motor vehicles. We could stop those deaths. But society's decided we're willing to suffer more or less 1,000 deaths for the benefits that it brings. And by the way, we'll figure out seatbelts and speed limits and guardrails, etc. We had terrorists attack many years ago on our airplanes. We did not say never fly. Can never fly. We put in metal detectors and you take your shoes off. And yes, they're hassles and expensive, but we found ways. My intuition tells me that within a few weeks, we've got to go from a situation of complete shutdown to not complete shutdown. And some people say, well, auto accidents aren't contagious. They are contagious. If I'm the only person on the road, it's very unlikely I'll be killed in an auto accident. It's only as others come out. Now, I'm not saying it's an exact analogy. I say that every day we live with risk. Some of them very serious. We've lived with viruses, some of them very serious. A complete shutdown can't be the answer for very long. Can it be an answer for a while the system girds itself? Of course, of course. We more or less shut down most of the economy from around December 20 until April 5, something like that. Not April 5, January 5. So we can do it. But there has to be something beyond. And I'll give you my last concern is not only people losing jobs, they're not going to pay their rent. Most people have, I think it was all number, 20% of the people have basically lived paycheck to paycheck. And another 30% live month to month. That's a pretty staggering number. And yes, Congress can say they're going to give them money, but how? And it's going to take time. And what happens to them in the meantime? And all those things. There is one other concern that people don't like to say out loud. Ignore the current corona situation. Ignore it. And suppose I said to you, Willie, I just visited a country and it had 35% unemployment, real unemployment. And months before, everybody was employed. By the way, everybody graduating from high school, everybody graduating from college, everybody returning from the military, there's nobody to even interview them for jobs. You've got this whole swath of young people who not only are having a hard time finding a job, there's nobody to even interview about a job. And by the way, you're not allowed to sell your home, you're not allowed to buy your home, and you can't go get furniture and. And then I said, do you think that sounds like a breeding ground for social unrest? I think people would say, yeah. It sounds like a breeding ground for social unrest. And the way that social unrest, and those of you who know me know I'm not a panicker, quite the opposite, historically. The way that social unrest happens, historically, is something very small. 9 kids go out. They had a little too much alcohol. They go out. They get excited. They throw a trash can through a window. They loot the store. They have, quote, fun. The police come. The police react. Somebody gets hurt. Now the people who got hurt are incensed, and it brings out more people. Now the protections become more extreme. Then the reaction becomes more. And every time you get a chance of social unrest, you get a chance for overreaction to social unrest. And that is a serious danger. I'm not a survivalist. I don't own a gun. I've never owned a gun. I don't have bullets. I don't have any of that. But at what point is that a serious concern? So my only comment on this is do not underestimate the cost. People aren't going to pay their rent because they don't have money. It's that simple. Now, that's not everybody, but it's going to be a lot of people. It's going to be a lot of companies. There are going to be some doing it strategically. But there's going to be some saying, even if I can pay my rent, why would I pay my rent when I only have a month's worth of money? Better I have it than you, landlord, have it. And I can always figure out about settling up later. This is not just true this is true of the nail salon. This is true of a residential tenant. It's true of everybody. So I think the economics of this have gotten lost in the flurry of the medical, which is very serious. So when you watch CNN or whichever you watch, they show you an ongoing tally of the number of cases. They show you the number of deaths, and that's very important. What they don't show you is, imagine they had a clock that shows the lost GDP, and they show you the lost jobs in real time in the same way. And society's got more objectives than one. It has multiple objectives. And I think we're still in a safe zone in that another week, another 2 weeks, another 3 weeks. As it stretches up beyond that, it becomes very dangerous. Willie, I'll stop there.
So Peter, what do you think is what's the tipping point? So you've laid out a very compelling case as it relates to the economic damage may be more severe and cause further implications to society and the health of all of us. So what's the tipping point? I wrote jokingly to someone over the weekend, fisticuffs on the floor of the United States Senate might be the tipping point. But I mean, what's the point where you get to where you say we can't keep going down this path? And it's one of the reasons I raised the testing issue. Because if you're going to get back to saying to people, let's get back to it, the only way I would think that people resume to any kind of normalcy is if they have some kind of confidence that the people that they are interacting with aren't sick.
Well, there are others. I mean, certainly testing is something that all the medical people I speak to are all for. I mean, it makes sense. It allows you to understand how there's a great op-ed, I think, in the Journal today by Stanford University medical guy saying we know the numerator, we don't know the denominator. And as you get little snippets of the denominator, you can get very different pictures on death rates and infection rates and so forth. So I think testing is important. But I also think there's some simpler ways, namely, and again, this is coming off of conversations I've had with a couple of immunologists, people I've read, et cetera, which is, so we all, and I'm just giving examples. You want to go to work? You have to be under the age of 65. I'm 69 yesterday, all right? So I'm just making up a number. You have to be under the age of 65. You have to wear a mask. You have to get sprayed. You have to wear gloves, right? You have to be in an office that's disinfected thoroughly every day, et cetera. Again, I'm just giving examples analogous to what we've done at airports. You know, there are steps. And by the way, if you don't want to do those things, that's great. You're not allowed to go to work, right? You have, and by the way, right now we have people showing up for work in the essential sectors that are doing these types of measures, right? That are doing these types of measures. So I think you lockdown's too strong, shut down people who are in the, 75, or you have lung problems or respiratory problems or serious heart issues, and do you maybe keep them sequestered? Yeah, that's very possible. I just don't think you can say everybody. And in fact, there are some immunologists that, as you know, say, gee, there is something to be said that you're not going to kill a virus. What you need to do is get, in an odd way, more people safely infected. And I'll give a silly example. I'm an NBA fan. I know some of you are, but I'll give a silly example. Want to go to an NBA game? Great. You get sprayed. All the employees, all the workers. By the way, that'll cost some money, so your ticket will cost a bit more. Everybody has to wear gloves. Everybody has to wear a mask. If you're wearing masks, no beer sales, right? No popcorn sales. But at least it's something. And the players wear them, the coaches wear them, the referees, all the fans. And somebody said to me, well, the players will never play if they have to wear a mask. They're making $10 million a year. They'll play if they have to be in ballet shoes and tutus. It's the other people. And they, of course, will work in that. So I'm not saying that is the answer. I'm just saying we're going to have to soon get more creative than just shut down.
So as it relates to the bounce back, a lot of people are wondering whether this is a V, a Nike swoosh, or I don't know, an L, if you will. What's your thought as it relates to how long it takes for us to get back up and running once we are on the other side of this?
It all depends how long it's shut. Every day that goes by, and I'm not saying we should stop the every day that goes by, but every day that goes by, it becomes more elongated coming out business. Or the restaurateur who was 66 said, I'm done, right? And somebody will eventually replace their restaurant. But if they say, I'm throwing in the towel because I'm 66, I was going to retire in a year or two anyway, that takes longer. So every day that goes by, it becomes much more elongated. If they could have done it in a half an hour, like you reboot your computer system, it would have been, just a blip kind of exercise. But it's hard to answer that, Willie, until you know how long. If the speculation is it goes on, I don't know, another 3 weeks, another 4 weeks of pretty heavy lockdown, I would say that 3 weeks of heavy, and this is non-statistical, I would say 3 weeks more of lockdown mean 2 to 3 more quarters before it rebounds. Now, it'll hit bottom at some point, but 2 to 3. And if you said it's middle of May, I'd say that's going to take 5 to 6 quarters to recover from, even though it's only 1 more month. And it's just that the damage to the infrastructure just gets that much more.
And if you were to look ahead and say, okay, at the end of the year, Dow is going to be at X and 10-year Treasury is going to be at Y, what are your bands there?
If I had to bet, I'm betting strictly on some type of consensus of the medical, some type of belief on political, and I don't mean political Democrat, Republican. It's not just us that has to make this decision. A whole lot of countries face identical challenges, right? It's not unique to us. It's not unique to our leadership, I don't think. I'd say by the end of the year, Dow will be down 10% or so from where it was when it started. Okay? Some number like 10% down from where it started, which would be notably up.
So you have over 25,000 by the end of the year?
Yeah. I mean, because to the extent, Willie, that there's you hit it when you were talking about spreads. Spreads are about uncertainty, right? Spreads are mostly they're about risk, but they're also about uncertainty. Spreads would narrow quickly if, quote, economically. I'm not saying because anybody's been malbehaved. We just don't know, right? So as a path is known, I think the uncertainty will recede a bit. And that's what's pushed things down so dramatically. It's not going to disappear, though, because whole businesses got shut down. I mean, just whole businesses got shut down. And it's going to take a while to get confidence rebuilt. Suppose tomorrow they opened all the airports, you're allowed to travel internationally, no prohibitions, etc. You might fly and I might fly, but nobody else is going to. So it's going to take a while, even if there were no prohibitions. But yeah, I'd say around that number. And on 10-year Treasury, they're going to work like hell to keep it really low, both naturally and artificially. So 10-year Treasury, if I had to bet, is going to be under 1.5 by year end.
So it's gonna sell off between here and there because everyone has been going for the risk-free investment. I was interested that last week the 10-year went from 80 basis points up to 110, and that appeared to be everyone moving into cash. This week it appears that it's come back where people are buying 10 years again, basically moving from cash back to a risk-free investment. Is that a fair analysis, or is that?
Yeah, that's basically, and it's how risk-free. But yeah, I think that's basically right. And it's the same thing. I think people will slowly move back in the market. Right now, and I don't mean at this literal minute, but for the last 2 weeks, it's the old statement, it's a lot easier to pick up a knife from the floor than it is catch it while it's falling. And truthfully, most of us don't need to call the bottom perfectly. I mean, it'd be lovely, but most of us don't need to call the bottom perfectly. Better to get more certainty out there, better to get more transparency both about the medical and the regulatory parts of this. Right now, it reminds me of a really good suspense movie, and you want to hit fast forward to see how it ends. But it goes a minute at a time, and you can't fast forward. For example, I'd love to know what Freddie and Fannie are going to really do, and when they're faced with challenges, how does it really happen? We don't know, right? I'd like to hit the fast forward and get there. I said that in a funny way. It's like walking into a movie theater right now, and on one screen is a movie where everybody dies of an alien invasion and microbodies killing us. And it's a good movie. It's a compelling movie, right? And the other, but it's a really downer. And then the other one is about a society, one of these dystopia societies where mankind is collapsed and everybody is kind of like Mad Max. Everybody's just trying to survive and nobody has jobs and it's all dystopia. And you go, that's a really good movie, but it's not very much fun. Which movie do you want to go to, right? That's the real challenge right now. And I'm not saying either movie, my gut tells me neither movie is the full story, something in between. But it does take adjusting the medical system. It does change our life approaches, and it's going to cost money.
So during your teaching career, you advised lots and lots of smart people at Wharton as it relates to, okay, here you are, here's your case in front of you. Your current operations are okay, and you have some capital on the side. Right now, are you in a capital preservation mode? Are you out looking for opportunities? How risky, right? When do people start to deploy capital again, Peter, as it relates to, and I know you're going to say, well, it depends on how long this thing lasts for, but let's just say that there's some clarity in the next 2 to 3 weeks that we know when peak infections are going to be, and we can start to see the other side. The moment that that comes out, as we saw in yesterday's market of the rebound in the equity markets, it may be too late. So what's how do you counsel people right now as it relates to capital deployment?
Well, and I'm doing that in real time with clients. My basic view is the following, which is nobody knows. It could get worse than the immunologists are saying. It could get a lot better than the immunologists. Could get worse than economists are speculating. Could get a lot better. I just don't know why most of us would want to take the risk. And you say, well, by the time we see, it could be too late. Hey, I'd be so happy if by the time I recognize that the market is fully recovered, everybody's back to work, and I go, I could have bought cheap, right? I'd be happy. I could live with that world. I really could live with that world if tomorrow we wake up and the last 2 weeks had never happened. The market's high, everybody's healthy, all's good, and you go, gee, some people made a lot of money buying at the bottom. I just don't think most of us need that. I think most of us are trying to figure out a more existential question like, do I proceed on my development project? Do I lay people off? Do I pay my rent? Do I pay my loan? I think they're more dealing with those. And I think those kind of are much more important in the near term. And my general advice, everybody's got unique circumstances. My general advice is cash is a good thing in times of uncertainty. And I include treasuries in cash, right? I mean, liquidity is a good thing in times of uncertainty especially. And that's my general counsel. Assume your construction loan is not going to be given. Assume that if you're rolling over a loan, it's going to be very difficult. How are you going to deal with not dealing with it? Assume your rental receipts are going to fall by 20%, even though they've historically run 0.5%. I think that's the world I'd be kind of analyzing now, because if it doesn't turn out, you'll live with it just fine.
So
that's where I'm at.
I'm going to give a quick anecdote as it relates to cap rates, and then I want to come back to you and your thought as it relates to where cap rates go. We had a pretty large transaction that 2 weeks ago we had 15 bidders in best and final on a multifamily asset, large asset. The 15 went down to 8 who raised their bid from best and final to be in the final round. We picked a winner last week, and the winner backed out of the deal yesterday. The asset was trading at a 3.9 cap rate. And if you look at some of the publicly traded multifamily REITs, this is a multifamily asset, they're all right now trading at indicative cap rates of north of 6. And so you sit there and you say, why would you take down an asset right now at a 3.9 cap rate when the publicly traded REITs have indicative cap rates of north of 6? What's your thought as it relates to, multi still has liquidity. And so it is without a doubt, as you said in your podcast, other than manufacturing Purell and toilet paper, it's a pretty darn good place to be right now. But what's your thought as it relates to cap rates and sort of price discovery over the next couple of months?
Yeah, there is no price, as you know, out there right now on private assets. You just described it, right? You just described it. And hopefully we actually go through a period where people don't have to price discover under stress. Hopefully we get forbearance, so you don't get foreclosures that trigger that cycle of forced sales that set false prices, that set more forced sales. So hopefully the forbearance situation will allow that to, in an odd way, not have a lot of price discovery on the private market in the next couple of months. I expect you're not going to get many transactions in the next couple of months. That's what I really expect. If you want to, quote, take advantage of the dislocation, it's the public market, because you can go in and make a bet. Is it a 6 cap going to a 7, or is it 6 cap going down to a 5? You can actually make your bet there. On the private side, I just think there's going to be very little price discovery for the next 60 days. And I think in an odd way, that's probably a good thing. I generally believe in prices, but there's enough pricing that people can do in the public market. There is an odd situation, and I'll take the hotels just for example as an extreme. You can look at a hotel, you could look at their preferred debt, their preferred equity, and you'd say, well, their coverage ratio on fixed charges is 1.7. Well, that's what their coverage was. What is their coverage as we speak? Well, if nobody can come to your hotels, you have a really bad coverage ratio. So it's very hard to even know how to price that through. And in fact, you mentioned, should they close the market? There is an argument, and I'm a big believer in free trade, but there is an argument that all we've done is operate a casino for the last couple of weeks in the stock market. I mean, it's not an investment market, it's a gambling market. Will it be up the next 20 minutes or down the next 20 minutes, as opposed to a fundamental analysis where you think NOI is going to grow at 2.4%, and I think it's going to grow at 2.7%, and based on that, we trade. There is an argument that it's just gambling at this point, just truly just gambling as opposed to investing. And I don't know if you want to turn the New York Stock Exchange purely into gambling. There's always a bit of that, but I don't know if that's what you want to make it.
It's great. I think we are almost at the bottom of the hour, and so a couple closing thoughts. First of all, I would like to thank Peter very much for joining us. Your insight has been fantastic as usual. The second thing is I got a couple things on the screen on the side as it relates to potentially using hospitality to house people rather than just student housing. The bottom line is the federal government needs solutions, and if they say they're going to go and master lease hotels from Hilton or Marriott, have at it. If they say they're going to go set up makeshift dormitories using the military to build them, have at it. If they go take some cruise line's entire fleet and put them off the coast of the United States outside of New York and Miami and San Francisco and LA, and they do that, have at it. They need to put a plan in place to take some of these, if you will, vacant assets and start putting them in place for the inflow of people that are going to be coming into our hospitals across the country. That's all I'm saying. I'm not trying to say that student housing is any better than anything else. We gave them an idea, and they're now, it appears, the Army Corps of Engineers and FEMA are working along those types of plans. The second thing is I've gotten a ton of questions as it relates to specificity on Fannie and Freddie's forbearance programs. Please reach out to your Freddie Mac Optigo lender, your Fannie Mae DUS lender, and talk to them. We obviously have all the information that Fannie and Freddie are giving out, and we and all of our competitor firms will be as helpful as we can be to give you clarity onto what the programs are, what the definitions are, and how to proceed forward. And the final thing I would say is to go back to the very top of the call, which is just that I'm greatly appreciative of all of you joining us today for these. We will put another one on for next week. I want to thank Peter again for taking the time to join us, and I wish everyone a good day. Be safe and be healthy, and thanks again for joining us. Take care.